No? Is it started? Yes.
Yes.
Okay. Wonderful. Hello, everybody. Welcome to our third GITA on air session. My name is René Wienholz from Loom Impact, a dedicated impact finance boutique in the mind of an impact investment bank here in Germany, Berlin. And today we have our fireside chat session with Julia Profeta Johansson, co-CEO of a new company called Reimagine, and we'll find out later about her and what Reimagine does and what the whole impact industry needs as financial products. So hello at first.
Thanks for
and hi. And so basically, just to explain a little bit what is GITA. We do this session for GITA, and GITA is a global network of thought leaders around the globe on the topic of impact investment from the tech arena and from the venture capital arena, and to bring more attention to impact investing. And this is what the story is all about for this session. So we want to drag more attention towards that topic. And this is an interactive format. So at first we will start with a one-to-one interview with Julia. And in the second part, which starts after around 30 minutes, we'll have the chance to do this interactively here. So you're able to ask questions. And now there comes a little instruction part that I always have to announce here, because we're using a tool called Menti. And you can see in the chat here, there is a link. If you follow that link, you'll see a page. And on that page, there you will not only see the intro of that session here, but also a button, Open Q&A. If you click on that button, you're able to ask questions. And you're not only able to ask questions, but if someone here already had a question that you also like, then you can vote it up. And so what we do later on after the first 30 minutes is to find the most voted questions. So the top, let's say 4 or 5 questions. We have time for 4 or 5 questions in that time frame, and to get them answered here. And it would be good if you write your name after it, after your question, because it's easier to find you and to name you. And probably if you want to step forward to ask a question yourself, then you can do this. So this is just the little instruction from our side. But now we come to the star guest of today, Julia. Hi again. And sometimes I really, at least for the GITA community, the people know you, but I think there are so many people here in that call that don't know you. So can you probably give us a little background about you yourself, where you came from, and especially what brought you to Impact and the whole thing? And there is one thing I always ask is I want to know a little fun fact about you. And I'm really nagging about that one because you can't get around that question. So Julia, it's up to you.
Thank you so much. It's such a pleasure to be here. I think the GITA is like a community that's very close to my heart. I was very happy to be almost like since the beginning around like Cecile and like the whole like core team, so to say. So I am originally Brazilian. I've been living in Berlin now for 3.5 years. And my story with Impact, I think it really starts actually since I was like a teenager. I think that my whole like upbringing of being, like a Protestant and having this kind of like give back mentality of having to use your life for something that is like bigger and more purposeful than only like making money has always been there. And I took actually like some detours, so to say, in my career, which were actually like good in the end. So I actually started as an entrepreneur that didn't really work out in the media space, and ended up going into impact investment banking, right? And they said, well, I now have to pay like some bills. I have to learn very fast. Where should I go? So starting to like learn more from within the beast, as sometimes I say, of like really understanding who are like the best out there, like doing like investments and understanding the whole like financial market. And essentially like investment banking was like my big like professional school that really like opened me like many doors. And I had like a serious like burnout actually, like while in banking, that really made me think that I think it's time to start like changing, and am I really connected to my values somehow? And I didn't get it right the first time around. I went to work for Rocket Internet. So I think that most
Yeah.
of you have heard about this incredible company, which is like crushing people essentially. And it was also like a very interesting school, but like a reality shock of, is this really like where I want to spend my time? So I ended up leaving Rocket, and things that really like destiny sometimes bring to us, I got to be presented to Yunus and the whole Yunus social business initiative. So I ended up like joining them to launch the accelerators back in Brazil. So it was like really like my intro into the whole like social impact space at first hand, of like seeing that finally there was a way of combining my personal values, my vision, with also my professional skills. So really like running these accelerators both in Sao Paulo and Rio really opened my eyes to like many of the pitfalls and the mistakes that many entrepreneurs actually do. And it was actually super interesting to run the first accelerator combining entrepreneurs from the slums and outside, which was also like something very impactful in my own life, I would say. And after working with Yunus for some time, I did have like some of my thoughts around like social business, and I was like more in love with the topic of impact investing, because for me it was a lot about how can you bring scale to impact, right? So how can you like open up how you understand impact and what kind of capital can you bring in to really make this something that changes systems, right? And that's when I joined Vox Capital, which was the first VC doing impact in Brazil. So we were investing in ed tech, health tech, and fintech. And I was like the partner responsible for like the investments being done through the fund, and also biz dev for the portfolio. So it was like a quite cool ride to really see happening in practice that we can combine returns with impact, and it doesn't have to be concessionary. So this became one of my strongest like flags, that impact is not either or, is and, right? And then for personal reasons, my husband and I, we moved to Berlin back in 2017, and yay. It was quite a journey, I would say, because then in 18 remote work wasn't actually a reality yet. And then I had to leave the fund because it didn't really make sense to continue being like in the board of the companies, etc., having like 4 or 5 hours difference. So it was like a painful kind of like transition period for me, but that really like unleashed a lot of like who's going to be Julia after Vox, right? So essentially I really got deeper into what is like one of my working fields, which is the topic of gender, and the gender topic of like balance, and with the impact lens. For me, like gender alone, like the whole topic of equality, it's not impact enough. So you have to always bring the impact lens to it. So I ended up like founding Ella Impact, which is like a sister network of the GITA, also really much focused on investments and business for good, and really mostly looking at technology, I would say. And while working with several like startups and accelerators, family offices, funds, etc., it really became very clear to me that there was a need of bridging the mainstream with the impact world, right? I do love to be like surrounded by people that understand impact, but I am also like passionate about like making more people about understanding about that. So I started like really writing about it, get involved in many conferences, and trying to bring it to like other networks, like what does impact actually mean, and how to break it down into a way that becomes like digestible. And definitely this inspired what is now like Reimagine, right? So I ended up like meeting my co-founder Sebastian, who was already bringing revenue-based finance to Europe, and we, yeah, minds came together to say like, what else is there? Is RBF enough as an impact tool? And definitely not, I would say. But there was actually like this new value proposition that we came up with, which was properly creating a B2B bank that is incentivizing impact through financial kind of tools, right? So all of a sudden, how can we make this even more accessible, especially for the startup and the tech ecosystem, starting in Germany, but then expanding into Europe, and who knows, the world, right? So Reimagine is then like this combination of like three main USPs, which is on one side, like super innovative, like neobanking, combined to like founder friendly like financing tools, while also inspiring incentivizing companies to become more impactful. So this is what we have been through now for the past year and a half, and very excited to see what comes ahead of us now.
That's interesting. So thank you very much for that overview. I mean, that's quite a journey from let's say the dark side of yeah, the financial industry towards the bright side of impact investing. And but I just you already mentioned what you intend to do with Reimagine, but basically just to give you an overview. We were in the last sessions talking mainly about the private equity situations, buy equity, the classic VC game, so to say, also in the impact investing space. And of course, that's possible, but what you do is different here. So it's definitely access to debt capital for young companies. And you said that is about scalability, but what is the challenge, especially for these young companies, and why it's necessary to have this kind of new neobank idea behind it? Why they fall short on access to debt capital?
Maybe even like one step back to that, Rene, which is us as impact practitioners thinking what are the best mechanisms and tools that we have at hand to actually foster more impact, right? I think that, for instance, at Vox, we always joke that in Portuguese, you have like two definitions for the verb to be, right? One is like the stationary, like the state of being, and the other one is like transitory. And many times, or like most of the time, we would say we are like in this transitory mode of being a venture capital fund, because this is the right now the tool that is like resonating with entrepreneurs, is resonating also with investors. And as we see also like the field and the concept of impact like developing, what we see is that investors on one side, they need to diversify portfolio, but also entrepreneurs are actually becoming more mature of understanding, can I have different sources of capital for different needs, right? So essentially, our take is that equity shouldn't be the solution for everything, especially not for impact, right? I think that many times you see amazing like companies that are not going to be developing as fast as the VC model actually requires for, you know. And here we can talk a lot about like the zebras, for instance, you know, or about just like more sustainable models, or even those that have like or more capital intensive. That's many times VCs, they just like look away. So what is the role of this complementarity of like playing with like part equity and part debt as well? And we're starting with a product that is somehow like niche, because it's like the first product in this like vast offering of like whatever it is, like non-dilutive, I would say, which is like bring to companies that have already found product market fit the opportunity of not diluting themselves further, only because they actually like need money to grow, right? So we're like giving them like debt essentially that they pay based on the percentage of the revenue they're generating on a weekly basis. And it is like cheaper than actually just going for equity, because it's not really diluting yourself, right? So essentially it's like, how can we look at revenue generating expenses, so to say, and how is it that we can look at like tech and personnel and say, oh, well, maybe my use of proceeds has to be a bit like different depending on where I'm at in this like stage of development of the company, you know. And this is essentially where we see that there is still like a gap, especially within the European context. I think that North America has already gone a bit like further into like this journey of starting to really tap into the financial markets kind of approach also for the startup phase, you know. And this is a little bit where I even like tap back into my banking days of seeing what are all the different like kind of like financial instruments that we can use also at this like lower scale, which impacts startups are also like requiring, you know. So for us, this kind of like B2B bank that understands startups and it understands impact is something that actually like no one is doing. And there is indeed like a need and an opportunity for companies to like continue growing on their own terms, because let's face it, even us as like equity investors driven by impact, yeah, we're taking quite a lot from like the entrepreneurs, you know. And we don't want to have at the end of the day like employees, we want to have like empowered entrepreneurs, right? That should be actually the aim of any like equity investor. So this is where I think there is a little bit of thinking also from like investor perspective of saying, what is healthy that I take from the entrepreneur? What other like capital sources can we actually unlock for them to use and continue growing on their own terms?
Okay.
Does it make sense?
Absolutely, yeah, it makes sense. But I got a critical question, but I think you got a brilliant answer to that. The critical question is, you talked about basically it's cheaper to use debt capital in certain situations than to dilute further while selling equity. Um, um, I mean, that's the same for the ones that are kind of young non-impact companies, or non-impact focused companies, I would probably say, and for the ones in the impact community. But what makes it especially interesting for those ones in the impact industry, probably? So is there a certain profile that differs from the ones that are founding not, let's say, specific SDG oriented, impact oriented companies?
Are you talking more about like what we're doing at Reimagine, or like overall?
Overall.
I think there's like one big component, which is what is the time frame that we are considering, right? I think that like most of the times, and it should be like all the time, impact driven companies, they're looking at the long term, right? And they're looking at like value added for like many more stakeholders than just the shareholders, which at the end of the day really create like a tighter circle of trust with other partners that really will increase value in time. So if you have this perspective that like my company is going to grow more and more over the long term, then your equity becomes even more valuable. Because if you compare to like non-impact driven, what we see happening a lot within the VC world, the venture-backed companies, that, well, let's grow valuation at whatever cost, not necessarily creating the very, robust kind of like foundation of the company. And in that sense, well, if I just want to see like the quick metrics, I just will, try to accelerate as much at whatever cost, because I'm going to get out of this. And what we see happen is like many times the impact driven entrepreneurs, they have this like long-term mindset that they say, wow, indeed, every percentage of equity that I managed to hold now is going to be much more valuable in the long run as well. Right. So I think that even from this perspective, it's even more like interesting for impact driven entrepreneurs than just like the traditional ones.
Yeah, I can chime in here. My personal experience is exactly the same. So I think the profile here is different, because people that are impact oriented founders basically want to see the change in the world for the next, let's say, 10 or 20 years, and that's only possible if you stay behind the steering wheel of your company. And that's not possible when you dilute so much that basically you're controlled by someone else. And so, yeah, I absolutely agree. I just have another question, but this time about Reimagine, or what you're doing there. I still probably don't get how you do that. I mean, basically, what you do is what every bank should do. Basically, they should trust someone in giving out a credit. But basically, what is your product? How do you assess the credit worthiness of these young companies, because they don't have any or a long track record, so to say? And is there not much risk involved to that you're focusing especially on that community?
That's a very good question. So I'd say that the underwriting process is a big part indeed of the secret sauce, right? So why is it that banks are not underwriting like startups? Because they just don't understand what is the value behind. So essentially what we created is actually a process that's pretty much like data driven. So it goes beyond just assessing whether a company is profitable or not. Essentially 90% of my clients are not profitable. And that's why you have to actually look at where are they at in their market fit journey and their traction journey. And for me, what's important to see is, wow, they are finding this product market fit. They have already like revenues. So I'm not the earliest stage kind of investor, and I'm not like disconsidering equity, right? So what I see is that, wow, they have had some backing. Maybe they have been bootstrapping and being able to really like generate their own revenues, and meaning I can see what's the direction they're going. And what do I do as well is like I connect directly to their data sources. So I don't only rely on, P&L information and financial information that many times, especially for startups, is like all over the place. But I get to actually see how much revenue is being generated, coming from where's the diversity of their portfolio of clients, where are they investing when it comes like to marketing, because still marketing for us, as we say, the digital marketing now is like the new like rental, because everybody is moving into like more like digital kind of business models. And then by understanding the unit economics, so are they really at a place where if they invest 1 year in marketing, they're getting like 3 years back in revenues, you know and in that way I can actually see how much cash they're going to be burning. Do they have enough to cover like other expenses that I can't cover with my kind of like profile? And me, I'm still doing like short term, right? So we're optimizing for like 6 months. So I get to see where are they coming from, 12 months of data essentially. And I have to project, are they going to be able to survive for the coming 6 months, you know? And how can I continue to assess the management? And as they grow, I can grow with them as well. So like my mitigation factors end up being, I do it like to start with in the short term. I look at really the traction in the market that they have. I get to see what kind of runway they have and how they manage their cash burn. So at the end of the day, I am really like mitigating a lot of the risk that many times, VC investors, they won't be able to because they're there for like 5, 7 years. So this is like where, compared to like banks, we're also like different because they don't have the technology awareness and knowledge to use in their favor, which is what I'm doing as well for us. And I would say that like this kind of approach also allows us to be much less biased, because it's like a almost like self-serving kind of um, platform that I just don't rely on how well the entrepreneur is pitching. I want to see, show me the numbers. So it will not benefit, as we know mostly that like men tend to pitch better for men, and then you have like women that are like more conservative and grounded. What happens even sometimes is that, well, they show me their forecast and I analyze previous performance and just like, where your forecast coming from? You have been performing much better than that, you know and this also allows you to say, wow, here's like a somehow my trust in you, that I see actually you performing much better than that. So why are you selling me, like underselling yourself to myself? So I think that this is like a part where we can really like bring technology in our favor and also in the favor of the entrepreneurs.
Okay, this is basically the twist that I've now got, where you're kind of where the fintech comes from. It's basically the method and streamlining of this assessment.
Yeah, and the combination with the banking side of things, right? So because they start like using our bank accounts and our cards, we get to see where things actually are going to, and also embedding into all of that the whole impact component, right? So for instance, like what we have essentially 3 dimensions of impact assessment, so to say. The first one is like a negative screening. So regardless if it's for funding or for banking, all clients go through it. And for us, what's important is like the negative screening, especially because we're talking about like startups, how many of those are actually mining? Very, very few. But we do have like a bunch that are serving either these industries from like a client perspective or a supplier perspective, right? So if you like, for instance, I saw it the other day, there's like super cool like drone company that essentially 70% of their revenues is coming from like oil and gas. So essentially for me to change their business model is going to be very hard. So that's a no-go for me. On the other side, what you see is that many of these companies, they might have like some, revenues or costs coming from these industries, but there is like potential of changing. And maybe I can be the lever of making them understand this. So whenever they become our clients, they go through an impact X-ray that also allows me to then like understand where they're at in their journey and classify them as impactful, responsible, or agnostic. And depending on business model and category, I can create like a tailored journey for them on like what should be your next steps in becoming a bit more impactful. And here we're like using the SDGs kind of framework as well to say what are priorities for this kind of niche that we're working with, and also for the region we're at, right? So we're looking at responsible production and consumption, gender equality, climate action, wealth, healthcare and well-being. So really trying to also make it relevant for them and for our context,
Cool. Sounds good. So you're quite Yeah, an enabler, or you even could inspire companies to become more impact oriented instead of doing the business as it is. So that's also the enabling factor. Mm-hmm.
And then like the component here is that it's not only on the content side that we can provide them the right tips and tricks and the community, but also can we question what financial incentives are used for? So what we do is also we have like an impact assessment, which is then like a bit deeper than the, you know, the X-ray. So these are for the companies that say, yeah, I am an impact driven company. And if they go through that, they get the bank account for free. And we're developing right now the model that really incorporates, as we call it, the risk, return, and impact dimensions into also pricing. So showing that the more impact you have, the more economic benefits you can also have. And this is where we start like changing the logic of like, what is a bank for? What can we use incentives for? You know, and then all of a sudden rephrasing that I'm not like penalizing those that are not impactful, but I'm really like giving a premium and a bonus to those that are, and just like inverting the rationale that, well, maybe if you start really having more intentionality on impact, you can also have the financial benefits at the end of the day.
Yeah, sounds great. So I've got two last questions before we come to the Q&A session, by the way. And folks, look at the chat. Paola posted a link to Menti where you can ask questions, and I'd love to see many of them because we have some time left. But to come back to my last two questions that I have, if you had a wish list, basically, and that's not about Reimagine, but probably about your experience in the impact industry or impact investing industry here in Europe and in Germany, what would be on your wish list? Where do you think we have gaps in the, let's say, financing system? So what would be, if the magic fairy comes around, what would be the top probably one or two wishes you could have? As what would you see as a product probably?
As a product,
or let's say ecosystem or initiative or whatever.
I think we need to have like more conversations about the whole, so to say, value chain of like financing and investments, right? I think that really looking at what are the gaps that we currently have, because I think that given that impact is still like somehow new, you still have like a lot of like VCs kind of like focus on impact. And then many people just think that, well, impact is VC as impact. And actually there is much more beyond that, that one actually needs to develop like the whole ecosystem and make these companies also flourish. So I think that this is like one of the parts where I still feel we need like more conversations around and expanding from like an early stage and like private equity investor perspective as well. What else is out there or should be out there for your portfolios to also thrive, right? Because like VC money, it's not like the solution ad eternum. And of course, we always talk about like mission or like impact driven or aligned exits, for instance, right? So what else should be in place so that we can map it out and also make it more obvious to other like players that are coming in and say, wow, these are like the gaps that we have to fill, right? I think, for instance, when we were structuring the impact ecosystem back in Brazil, a lot of the conversations were, we're doing VC right now. Where are our bottlenecks? Upstream, downstream. And actually we saw like on both sides. So what would be our next like vehicles and funds and whatever it was that could also like fill these gaps. And I think this kind of like structured conversation would also be like super helpful within the European context. And especially because here we do have like some governmental like initiatives that can speed up the process, which sometimes we like struggle in other like underdeveloped countries, so to say, that can also like help pretty much like speeding up the process also for Europe and making Europe like, you know, an impact champion, so to say.
Yes, let's be impact champions. I fully agree to that one. Good idea. So one last question from my side before we come to the Q&A session. You skipped one question. The fun fact question. You can't get around that. So what is a fun fact that literally nobody knows about you?
I wouldn't say like nobody knows, but those that are like close to me, they get to like learn. with time is I am a Walt Disney fanatic.
Wow. Okay. Just since your childhood. So.
It became much more intentional as I grew up and I made sense of everything that I loved back then. So, like Walt Disney as a person himself, I would say, and not only what we see out there as Disney, but his visionary approach of understanding the power of like content and entertainment to change lives and make the world a happier and better place. Of course, there are like many, humongous like flaws, etc. But I think that the power of like one man with a vision reshaped what like entertainment used to be and made it actually become a powerful tool of spreading hope, spreading good news somehow. Right now, like really like stepping up even after his death, of like making it a powerful tool of like speaking up for mental health, diversity, empowerment of underrepresented groups. And I think that there is so much power, and I think that I'm crazy about like everything that he was doing, and also like what they stand for in like so many different levels, even though they haven't like claimed the impact label. I think a lot of what they do as a group and organization is really somehow aligned to like principles and values that I think that many of us like abide to. So I do have like a Mickey Mouse behind my computer, and I do have like a photo of Walt just up there. So
Okay. Yeah, right. I would
um
not have recognized that, but yeah, that's
yeah.
right.
So normally I have like a little Disney somewhere hanging around, and like people's like, what is that? How old are you? It's like, wow, old enough to continue like carrying, some Disney stuff around.
Well, that was a very good conclusion to let's say convey to the Q&A session, because as you said, it's always about what you see, what could be impactful and what could be meaningful for people. And yeah, so let's open it up, so to say. And I've seen that we've got some questions here. And let me see if there is any ranking or not. But basically, I think, Jürgen, do you want to ask your question or questions? Because you already submitted 2 of them.
Yeah, Jürgen has like many comments here already in the chat, right?
Yeah.
I'm sorry, I was just tested by a family office principal about the GC index, if you know that one, and the MBTI, and it comes out always and again that I'm an extrovert. So yes, I'm going to ask questions in a fireside chat. I'm going to ask. I'm also going to comment. It's what this thing is all about. It's networking and changing thoughts. And one of my first ever mentors told me, if you agree or disagree, it's the exchange of knowledge it's the exchange of ideas that broadens all our knowledge. We have to exchange. We may be in a different opinion, but if we don't ask, if we don't share, if we don't say anything, I see a lot of people sitting here, and I actually feel also a little bit lonely on the chat side of things or in the question side of things. I admit.
It's basically due to the situation that it's in the evening, so people need to get used to the situation here.
But the evening here in our hemisphere, maybe the morning somewhere else. And
that's right.
Julia comes from Brazil. She knows that there is a little time difference there. I just had a discussion with a Brazilian yesterday, so yeah, I think it's always an issue. No, the question, it's actually 2 questions that come from what I'm doing is we're trying to start up an airline that we want to take into carbon neutrality within 3 to 5 years, within the decade, we say, on the safe side, but not like in 30, 40 years, like airlines, an airline association still promote, and even the government. We have the hydrogen workshop these days in Germany, and they're talking, and at the same time in Saudi Arabia, they're investing 700 billion into hydrogen, and we're talking, and I just listened into what they're coming up. It's the same thing. It's a lot of talking, but not moving. And we're looking into funding, and we're being told. I've been actually introduced by European Investment Bank to people, and we keep seeing, okay, yeah, we want to do something, but we want to do it on the cheap level. So how can we dig into funds that allow us to get started is the one thing. And on the same, in that context, something that came up more recently is there's a lot of public funding around, like European Investment Bank calling itself now the Sustainability Bank, a wonderful wording, wonderful greenwashing, but what they're doing is actually, yeah, we're going to provide aircraft to an airline which is not actually going on biokerosene. It's still the old dirty stuff they're funding. So talking about this, I was just recently told, yeah, you know, these investors in the startup phase, they are not looking into these funds because they're too bureaucratic. But you know, I think that's something. If you want to start something bigger, like an airline, you're not talking about 1 million, you talk about several million. It's not something that comes in cheap, but it comes with a return. But nevertheless, you still struggle, whereas investors could benefit from covering the risk by using those public funds. And why is there such a, especially to Julia, because she is here now today, and she has. I really appreciate what you talked about so far. But why? How do you see that? You're also looking into helping startups and early stage companies with sustainable impact. Why is it not more that those sustainable bank funds of EIB, also, for example, are being used?
So in my opinion, and I've been having like conversations with them for the past years, or essentially like since I landed here, like trying to mobilize capital for other regions as well. And the bureaucracy is just ridiculous. The understanding of impact is still like some light years behind, I would say. And when it comes to like risk taking, there is a lot of like learning still to be carried out, you know? So what we see happening is they have like some initiatives, they're like more like impact driven, but then they want to see people with bunch of years of like track record, very established institutions actually doing that, and having, you know, like very clear, like, you know, what are the benefits that are going to be added to the portfolio companies on the level that many times like startup sort of like fund managers also are not there yet. So for instance, with like guarantee kind of like instruments where essentially they're like benefiting banks that already operate and already have like portfolios. And that's, I just like saw someone like writing like greenwashing, etc. So essentially they are still like tailoring products, in my opinion, to incumbents and to institutions that essentially will have to like relabel what they're doing, and then they can access these funds, right? And even when it comes to like many of like the VC funds and the VC programs they have, and then I look at the list of VCs being supported, I'm just like questioning, are you serious? Are these like all the funds that you're supporting? This is the kind of impact. And I think like, for instance, I was just like now jury of 7 different like funds, and where they were like labeling like innovation as impact, and say, hey, you know, it's not because it's innovation that is automatic impact. Technology is like neutral. So I think this is like sometimes where some of these funders get it wrong as well, saying that, wow, we're like funny, you know, innovative funds. But at the end of the day, what's the final outcome, right? And the impact lens actually come in. And then to your point of like funding large scale innovation, I think there is this whole unlearning of investors of what risk and return actually mean. And what is it that like the VC industry in the US actually primed investors to be expecting as well, right? So for instance, I was like mentoring last year a couple of businesses that are like super high into like CapEx, because there were, you know, like like big facilities that had to be like set up. You had like production kind of like lines that had to be like bought up, heavy machinery, etc., that are like truly impactful because they're going to like carbon like capturing, for instance, right? But then, is it like a model for a VC fund? It's not, right? Not with the traditional model. But then you can also have like other ways of like playing with that, which comes into, for instance, having purchase agreements after you have like proved your proof of concept, that you have like AAA buyers actually getting from you. And this might help you to have like this additional safety and the guarantee that potentially a family office could understand this risk. But no one is actually talking about that. You know, all the accelerator programs, incubators, they're all like priming startups to become like VC investments. And especially for impact, there's like much more than that. So I think this is where we have to become a bit more like smarter also on what kind of funding sources. And I'm not here like preaching for RBF, but like in general, that are actually like suitable for the business model they're going after, right? So like in your case with like I think, are you going to be doing like aircrafts, or are you going to just like be operating the system?
No, we're talking about starting an airline with about, in 10 years, 200 aircraft that's going to fly carbon neutral and using synfuel as a basis. Also, we have talked to EIB, European Investment Bank, for example, and they are hot for starting up, or if we have started up, to develop and fund the synfuel facilities. But they're not into starting something up at all. They are, yeah, we want to go with you once you have an investor that starts up your company. And this hurdle is actually something that I hear over and again, that this hurdle is a big problem. Whereas it's also a kind of, yeah, a challenge. Just this week, I was told there was an analysis done about what the impact really is of impact investments, and they found about 4% impact to the SDGs quantifiable, whereas all others were greenwashing, like, yeah, we're going to do something, we're going to be SDG 5 gender neutral. Yeah, we have that we want to hire also women, and we want to hire other, people of other color and things like that. We're going to be so good, but this is standard. This is nothing that's really going to be in our understanding about the SDG, which is about, okay, what's your real impact you're doing? What is change to the society you're doing, and improvement to the society? And we started our thing like, okay, we want to be good. We want to change the airline, because I'm an airliner by heart for more than 30 years, and I love my industry. But I know it's dirty. And in 2008, we talked about hydrogen already with Virgin Green Funds. Lehman came, sorry, I failed, but ever since I'm on this, and I think there is something that needs to be done. And now we have synfuel. We can go carbon neutral today. There's a facility in Oslo being currently built by a German company, Sunfire, from Dresden. They're building it in Norway because the EU funding was not available, but the Norwegian funded it.
Yeah,
it's for me so stupid. So excuse me, I'm getting emotional on these things.
But I think just like one thing, and then Renee, up to you to like moderate. I don't know.
Yeah, I just need to step into another question. So but basically just answer that one.
But what I would say is, like, again, how much are we relying actually on governmental support? We can't. And that's why impact investing, for me, it's such a powerful tool, because it's private capital. And then you actually see many enlightened high net worth individuals and foundations, etc., like understanding that there's like so much power in really like fueling innovation that is also attached to risk, but like allowing themselves to have like the visionary perspective and being able to embrace innovation, because the government won't pave the way. You know, private capital has to come first and has to be aligned also with their financial incentives. These things have to come together. And then once there is like, like some kind of validation, and this is something that I heard not only from like European institutions, but other ones as well, is like, we are dealing with public funding. We need also for-profit professional investors validating our decisions, so that we also have like a fallback in case people come at us and say like, that investment didn't really work, or didn't aim at the results that we were expecting to have. And then you have actually like someone to blame, or say, well, it was a
CYA.
Yeah,
cover
exactly.
your ass.
Yeah. And at the end of the day, you have actually like a market player that is like validating the whole thing. So actually this is like at Vox, for instance, that's how we actually manage things. We had, you know, private institutions and private individuals actually coming in, and then like showing a few other like governmental institutions on the Brazilian and like Latin American level actually say, wow, it is proven, you know, for profit investors are understanding that, and now you can come in because that's the structure.
So I just want to ask two questions that also came from the audience, and one I have to read for myself because David, who was joining that one here, needed to step out earlier, but he had an interesting question. So basically, he was wondering if you have had a thought about correlation between your funding and the actual impact, and how you execute the impact measurement in your targets. So especially the last one is interesting, because that's also a question in GITA always: how do we measure impact, and how do we track that?
That's a pretty good question. So I think that first thing is like going back to like, what is our theory of change, right? So whenever we're talking about like measuring impact, also from like an investor perspective, is like, what is it that you're looking at achieving on the fund level, so to say the investor level, and then at the portfolio level. So for us, I want to see like more and more companies transitioning from being just like agnostic or responsible into becoming impactful. And that's why we developed this kind of platform that is integrated into like the banking, that I get to collect information basically on a constant basis and see whether they're developing on the different kind of like dimensions that I have set up for them, right? So it's like different of just like a pure impact investor that is saying like, wow, I need to like impact or just like achieve a certain like level of CO2 reduction, or really be able to like serve X amount of kids or whatever. Our impact levels, like how is it that the company as a whole is transitioning? But at the same time, what we are looking with like funding, it's also like additional KPIs. So like for us, what is important is like understanding that, are we truly delivering less dilution as we claim? Are we actually being able to like have more unbiased investments, right? I think this is like two things that normally people tend to also confuse, which is what is the intended impact on the investors level, and then at the portfolio level, right? So like for us, right now, I do ask about like, what are the KPIs that you as a company are tracking? But again, many of the companies that I invest into, they're still not tracking the impact. And I have to also like make it digestible for them. So what are the different dimensions that you could be actually looking at? And one of the things that I was discussing like some other days with some investors and people trying to come up with solutions on the measurement side of things is also, so many times we are putting so much burden on the startups when it comes to measurements. Like I was like seeing like this investor, they wanted to track a 25 metrics, you know, of impact for like the company. It's just like, wow, the company is going to be working for you essentially, right? So on like reporting like different KPIs. And I think this is also something that we have to respect. What is the stage at which the company is at, to know how deep can you actually go? How much can you actually ask? What kind of resources they have at hand to actually like deliver their product while also like reporting on impact. So I think this is like where also there is like some adjustment. And I'm still of like the opinion that intentionality has to be translated into KPIs and has to be translated into strategy. And then the question is, how much can you actually get at what stage of development of the company? So these are like some thoughts that I have around that.
Absolutely. So I fully agree. As I always work with as a business angel, and also with our work here in the Impact Investment Bank, I also see that it's. I think we treat impact startups quite unfair, because basically you don't expect not only the financial data but also the non-financial KPIs, and basically that's quite a burden. And this is also the reason why we at the moment next month we will release a platform that makes this much more easier and accessible and understandable for every human, by the way, because that's also quite tricky to read impact reports. But anyhow, it's not an advertising for me, but today we got a novelty. And there is one question that was asked by the master of ceremonies himself, Mr. Paolo Costi. And so I hand over the word to you, and probably, I think time-wise, this will be the last question that we're able to answer today. But Paolo, can you ask the question that you had?
Yes, yes, thank you, Rene. No, it was just more like about a curiosity. As you've seen, probably one of also of your objectives is to kind of leverage, kind of create a bigger ecosystem for, like, let's say, sustainable startups. If you've seen any trends, or like, as I assume, pretty much all the startups are pretty much tech driven, if you've seen any trends in technology that you've seen that it's been successful, that is going to help to create, like, to have a better impact, like a positive one. That's all.
One of the things that I'm seeing get more to the center of the discussion is like big data. So it's not necessarily one technology per se, but it's truly like a different like approach to how we understand data, how we extrapolate, and how we try to come up with solutions that are like less like what we would like to see and what actually needs to happen. I think there's like one that I've been seeing like more and more happening around us. Another one, I think, I do see some attempts towards AI. And I do believe that AI has a humongous power. I just see that many people are still not very comfortable with actually what AI means. So there is still like a discrepancy. So like they're like claiming to be AI, and then when you look a bit deeper, it's like there is a little bit more to actually become proper AI. But I think that people are like becoming more aware of like the power of using this kind of technology also to leverage impact. And another one that just because like I am in the fintech space and I'm pretty much like getting more and more involved with the topic, which is not only like blockchain, which I've been like a fan of for like quite some time already, but also like digital currencies, right? So Bitcoin being one of them, and all like the discussions around that. I think there is still like this like polarization of like understanding how to use that for really empowering and creating impact. But more and more, the overall concept of also like positive net effect is becoming something that it, like activists are using more and more. And I do see also a trend in companies and investors understanding there is like power to actually question the underlying fundamentals of what it means to adopt digital currencies and these kind of solutions as well. So I've been like actually happy to see more and more investors being like friendly towards that, because I would say that maybe 5-10 years ago, I didn't see it like the same kind of level. And I think this is also like a powerful kind of initiative that we have to look into, and really like questions many of the fundamentals of even like the investing that we have in mind because of the previous like 100 years of how investment has been done, you know? So these are some of the things that I would just like quickly highlight here.
Thank you.
Wonderful. Thank you very much for these insights. And exactly on spot, so to say, we finished this session. So Julia, thank you very much for joining us today and for answering all my nagging questions and all our nagging questions. And hope to see you soon. And I wish you a whole lot of success for Imagine. And yeah, and hope to see you again in the GITA context, of course, soon. As soon as you are able to step out of your, you said you had meetings from 9 o'clock on today, one after the other. Yeah.
Yeah, it was bad planning on my side today.
Oh yeah, that's but like I think that's quite stressful. Yeah. But anyhow, it was great having you. And again, also thank you, Paolo, for organizing all this in the background. And so have a lovely evening, everyone around the world. Yes, and see you soon on GITA on Air next time. Bye bye.
Like a little like less common, like whoever is like an impact company, you might get like a free account at Imagine. We're launching in the coming 6 weeks. And if you're based in Germany, you can have like full access with additional perks. We'll be happy to see you around there.
So
Thanks
go ahead, go to Imagine.